sector, particularly services and agricultural subsectors, supported by continued policy interventions as well as credit expansion to the private sector. While output growth remains positive, committee was concerned about the contraction in economic activities as indicated by the Composite Purchasing Managers Index, which fell to 47.2 index points in August 2022, below the 50 index points benchmark, compared with 50.4 and 51.9 index points in July and June 2022, respectively, an indication of a weakening output situation. The contraction was attributed to a decline in production levels, new orders, inventory levels, employment levels, and persisting shocks from the global economy associated with both Russia-Ukraine war and the unabating pandemic, as well as other domestic shocks. The committee, however, expressed optimism on the economy's recovery in the short to medium term in view of the unwavering support by both the monetary and fiscal authorities in Nigeria. The committee noted the continued uptrend in inflation for the 7th consecutive month, with headline inflation year-on-year rising to 20.52% in August 2022 from 19.64% in July. Both the food and core components rose 2% in August 2022 from 20.02 and 16.26% in July 2022, respectively. The hike in energy prices, such as rising price of automatic gas or AGO, hike in electricity tariffs, as well as the perennial scarcity of premium motor spirit PMS, contributed significantly to the building of expectations, thus pushing up the cost of transportation and production. Other contributory factors include the broad-based insecurity across the country, which continue to dampen production activities generally, legacy structural factors such as inadequate state of critical infrastructure, high cost of importation of essential grains such as wheat, and increased demand for money associated with the forthcoming electoral campaign season. The ongoing monetary policy tightening by the U.S. Fed is also putting upward pressure on local currencies across the world, with pass-through to domestic prices as investors exit these economies to seek higher yields in U.S. dollar-denominated fixed income securities. Committee noted that broad money supply M3 grew by 11.05% in August 2022, compared with 8.66% in July. This was driven largely by the growth in net domestic assets NDA of 26.19% in July. Monthly weighted average open buyback OBB rate declined to 13.21% in August 2022 from 14.15% in July, while the interbank call rate increased to 15% in August 2022 from 13.00% in July 2022. Capital adequacy ratio and the liquidity ratios remained above their prudential limits of 13.4 and 40.1% respectively in August 2022. The committee applauded the improvement in non-performing loans (NPLs) ratio to 4.8% in August 2022, compared with 5.0% in June 2022, reiterating its call on the bank to sustain its tight prudential regime to ensure that NPL ratio is kept below its 5% prudential benchmark. The MPC noted the development in the equities market and the review period, as all share index decreased to 49 from 51,817.59 index points on June 30, 2022. Market capitalization also decreased to 26.88 trillion naira from 27.94 trillion naira during the same period. The bearish performance reflected sustained profit-taking and sell-off by investors rebalancing their portfolios in favor of higher yields in the fixed income market. The committee noted the marginal increase of 0.39% in the level of external reserves to 2022, despite continued demand pressure. With crude oil price forecast to continue to moderate in the short to medium term, members urge the bank not to relent on its various policies put in place to support non-oil exports in order to shore up external reserves. Under the real sector facility, the bank released a sum of 66.99 billion naira to 12 additional projects in the manufacturing and agri sector. These funds were disbursed from the real sector support facility from the differentiated DCRR requirement component of the facility. Cumulative disbursements under the real sector facility currently stands at 2.1 trillion naira, disbursed to 426 projects across the country. Furthermore, under the 100 for 100 policy on production and productivity, the bank disbursed a sum of 20.17 billion to 14 projects in the healthcare, manufacturing and services, bringing the cumulative disbursement under the facility to 93.39 billion naira to 62 projects. In the healthcare sector itself, 44 billion naira was disbursed to two healthcare projects under the healthcare sector intervention facility, bringing the cumulative disbursement to 130.54 billion naira to 130 projects comprising 32 pharmaceuticals, 60 hospitals, and 39 other services. Under the export facilitation initiative, the bank funded several community projects in the non-oil export for value addition and production to the tune of 3.28 billion. And this is aside the over 50 billion disbursed through the Nigerian Export-Import Bank, NEXIM. The micro, small, and medium enterprise MSME sector, the bank supported entrepreneurship development with a sum of 39.26 million naira under the Tertiary Institutions Entrepreneurship Scheme, bringing the total disbursement under this intervention to 332.43 million naira. Under the intervention facility for the National Gas Expansion Program, the bank disbursed 1 billion naira to support the adoption of compressed natural gas as the preferred fuel for transportation and liquefied petroleum gas as the preferred cooking fuel. Our outlook. The broad outlook of the global and domestic economies in the medium term remains clouded by uncertainties associated with lingering headwinds from the Russia-Ukraine war and the residual impact of the COVID-19 pandemic. Others include tightening global financial conditions with elevated shocks to foreign capital flows as some advanced economies continue to pursue aggressive policy rate hikes, the high level of corporate and public debts with heightened risk of another global financial meltdown, and the high level of inflation across several economies. On the domestic front, available data on key macroeconomic variables indicate that output growth will continue for the rest of 2022, however, at a much subdued pace. Some of these domestic shocks include the high level of insecurity currently the general elections approach, continued upward pressure on inflation driven by exchange rate pressure amongst other domestic factors. In addition, domestic price development is expected to maintain the current upward trend in light of the buildup of increased spending and demand for money as the 2023 general elections approach. Accordingly, Nigerian economy is forecast to grow in 2022 by 3.52% CBN estimate, 4.20% by Federal Government of Nigeria estimate, and 3.4% by the IMF estimate. The committee's consideration. Ladies and gentlemen, and how this had begun to retard growth in both advanced and emerging market economies. Members noted that though the global economy was progressively weakening due to the various headwinds surmounting the recovery. In Nigeria, output growth had been sustained as a result of a combination of development finance interventions by the bank and fiscal stimulus by the federal government. Members noted that in the last 3 years, the CBN had injected over 9 trillion naira into the economy, in addition to offering 2-year moratorium for 10-year long-term loan facilities. The committee believed that these interventions have significantly helped to engender growth. However, in light of the persisting pressures on inflation, the committee encouraged the bank to maintain a close watch on the inflationary implications of these interventions. The MPC noted the moderate downturn in the equities market, attributing it to a continued outflow of portfolio capital as investors reassign their portfolios to more attractive US dollar-denominated fixed income securities. The committee, however, also called on the federal government to continue to improve the ease of doing business in Nigeria, to retain the current patronage of foreign investors through sustained investor confidence in the Nigerian economy. MPC applauded the bank for its continued stringent regulatory measures over the banking system, noting MPC was concerned that within a 4-month period, inflation had accelerated aggressively by 280 basis points from 17.7% in May of 2022 to 20.5% in August 2022. The committee was consequently of the view that given the primacy of its price and monetary stability mandate, it is expedient that the focus must be to rein in inflation at this time. The committee was therefore of the view that a hold or losing option was not in consideration at this meeting at all. This is also because a loosening will further widen the negative real interest rate gap and worsen the financial market conditions as savings mobilization, investment inflows will decline further. It was also of the view that with the aggressive policy normalization in advanced economies, loosening the stance of policy would result in a sharp depreciation of exchange rate, leading to further hike in capital outflows. As regards a hold decision, a hold would mean a continuous deterioration in real earnings of fixed income earners and the livelihood of middle and low income households. The MPC noted that a tight policy stance would help consolidate the impact of the last 2 policy rate hikes, which is already reflected in the slowing growth rate of money supply in the economy. It also felt that an aggressive rate hike will slow capital outflows and likely attract capital inflows and appreciate the naira currency. Committee decision. Members deliberated on the impact of the widening margin between the current policy rate of 14% and the inflation rate of 20.52%. At this meeting, the option to loosen the policy rate was not considered, as this would be gravely detrimental to reining in inflation. The committee thus agreed unanimously to raise the policy rate to narrow the negative real interest rate and interest rate gap and rein in inflation. Committee thus voted unanimously by 100 basis points and 1 by 50 basis points. 10 members voted to increase CRR by 500 basis points, while 2 members voted to increase it by 750 basis points. In summary, the MPC voted to 1. Raise the MPR to 15.5%, retain the asymmetric corridor at plus 100 and minus 700 basis points around the MPR, increase the cash reserve requirement ratio, CRR, to a minimum of 32.5%, and 4, retain the liquidity ratio at 30%. Thank you for your attention.
Thank you, Governor. And that was the communique number 144 of the 287th meeting of the Monetary Policy Committee of the Central Bank of Nigeria, held yesterday and today, the 26th and 27th of September 2022. We will be taking questions from the press, but as will be expected, far-reaching decisions have been taken this weekend, and I know that most of you will want to ask questions. So what we'll be doing, we will take a number of questions here, but tomorrow morning by 9 a.m., we will go kind of granular discussion to be led by the Director of Monetary Policy Department and Secretary of the NPC. And all members of the technical committee will be at that meeting. And so you tell us your name, and then the media house you represent, and then your question.
Thank you, sir. Good afternoon, Mr. Governor and members of the NPC. I'm Nancy Naji. This is a wahoo moment, really, because I think this is the first aggressive nature I've seen central bank in a long time, raising interest rates by this time. My question is really, with this way that MPC has gone, does that mean that whenever inflation rises, that the MPC would increase interest rates, just like we're seeing across the world among Feds and central banks across the world? Will increasing interest rates also, will it likely lower inflation? Then the third part of my question is, with this decision, Governor, how confident are you and how certain, how sure are you that this will not likely depress the economy and Nigeria's GDP? Thank you.
Good afternoon, Mr. Governor. My name is Nduka Chejin of the Nation newspaper. So, recently, the Nigerian Bureau of Statistics released inflation figures. Now, inflation is about 20.52%. Mr. Governor, sir, we know that this is a global challenge. When do you think we will begin to see a deceleration in inflation in Nigeria? Thank you very much.
Good afternoon, Mr. Governor. My name is James, a major with this day. Recently, on the sidelines of the United Nations General Assembly, you mentioned that non-oil exports, the proceeds from non-oil exports increased to about, $959 million. Given this, that is in the third quarter of 2022, what are you going to do to make sure that this feat is sustained? And my second question, sir, the bank recently stepped in to help checkmate what will have been a major setback in the international travel from Nigeria, with the release of $265 million to airlines to settle outstanding ticket sales. Are we expecting more of this from the CBN to sustain, to ease the travel? Thank you, sir.
Good afternoon, Mr. Governor. My name is Issa Abdul Wahab. I work for New Telegraph newspaper. The e-naira will be 1 year in the moment, precisely October 20. What sort of feedback are you getting, given that this is a novel idea that is very rare in the continent of Africa?
And also, Governor, I have a number of questions from people who send their questions online. This one is coming from Babajide Komolafe. And he says, the e-naira hackathon was adjudged to be a huge success. Considering the number of entries and the innovative ideas brought to the fore by young Nigerians, is the bank considering tapping into the technological knowledge base of these youth in future innovative ventures in Nigeria's financial system, particularly in the payment system? The next one is from Nume Akage of This Day. And the question is, when you launched the RT 200 FX program in February, you said the summit will be held biannually. What are the outcomes of the maiden summit held in June 2022? Are we expecting another summit before the end of the year? And finally, from Collins Wednesday, The Nation. Governor, sir, with the worst of the COVID-19 pandemic now behind us, the bank recently reverted interest on all its interventions from 5 to 9%. Observers are keen to know what the impact of these interventions are. Thank you, sir.
Well, let me thank all of you for these questions. The first question, which came from Nancy, raised issues about the fact that there's a lot of worries about inflation trending upwards globally, and wants to know, and first ask the questions, that will MPC continue to raise rates by or as long as inflation continues to go up? And the second part of our question is that how are we sure that raising rates will rein in inflation? And third, are we sure that this tightening will not ultimately reverse the GDP? On the first question, you all recall that at the last meeting that we held, which was in July, I was very clear in hinting that as long as we see inflation trending upwards, that I cannot, or that MPC cannot give any assurance to anybody that we will not continue to raise rates, because we've seen rates move recently very, very aggressively, and that is the reason we are following it up in the May, in the July, and now the September meeting very aggressively for us to ensure, to see to what can be done to rein in inflation. So, again, Nancy, what I will say is this. My answer is that I cannot assure you or anybody who says you should ask the question that we will not raise rates as long as inflation continues to trend upwards. The second part says, how am I sure, or how is MPC sure that raising rates will rein in inflation? I think it's important for us to know, to state that the time-tested monetary policy theory has shown that the one and the easiest way to tame inflationary pressure is to raise rates, and that is the most preferred options that have been adopted globally. And what does that also mean? That if you want to see the success in reining in inflation, you have to try as much as possible to raise your rate to a level that is equal or possibly even higher than inflation, so that your inflation rate must lag your policy rate. If your inflation rate does not lag policy rate or interest rates, you have to do so aggressively, because it results in what we call negative interest rate, which is itself a disincentive to investment. So when you ask the question, how am I sure? I will say, time-tested monetary policy theory says that this is the right way to go. The reason is because if you fail to raise rates because you are afraid that raising rates in some cases, like you said, or like you are seeing now already globally, even in the advanced economies, if you say you will not raise rates because it will retard growth, whether you like it or not, whether in the short run or in the long run, not raising rates will still retard growth as long as inflation keeps going up. It is therefore imperative that you must raise rates in order to rein in inflation. Yes, it will retard growth, but it is important that you know that the raising of rate is what will help you to slow down the rate of inflation. And how will it eventually retard growth? You raise rates, you don't raise rates, you remain mute. What will happen is that consumption, eventually you'll find that consumption and investment expenditure will be affected because purchasing power of the citizens, of the consumer, will erode and completely possibly dissipate. Or you will also see that once inflation continues to bite, what you can buy with, the quantity of goods you can buy with some money will reduce. And that is what also helps to increase the level of poverty in your country. So you don't have a choice but to raise rates. Our own study, our research study at Central Bank has shown us that once inflation trends above 12.5 or let's even say 13%, it will retard growth. We have seen inflation in the last 4 months move so aggressively in Nigeria. So it is difficult for us, for this NPC, with all the data available, with all the research that has been conducted, it is difficult for us not to go in the very aggressive way we decided to go today. We know to some it is not what is expected, because some of them will come out and say, look, we are trying to retard growth, to make the cost of borrowing more expensive and the rest of them. But I can tell you that this is the best option at this time that we have to adopt. So now, how are we sure that the decision will rein in inflation? I've already said it. We believe that it will. And what we have done at this meeting is to say we will move CRR up by 5% to a minimum of 32.5%. That will move NPR up by 150 basis points. That means over the last 4 months, we moved NPR up by 400 basis points. But at the same time, let's not forget that inflation rate in Nigeria at 20.5 is still higher than our policy rate. So which means we are still lagging. We are still in the realm of negative interest rate, which remains injurious to the economy. Now, what message do I have for the banks? We have increased the CRR, and we expect that this decision at this meeting must be seen to be potent and must achieve the effect that the MPC thinks it should achieve. What is the message? We expect that all the banks in Nigeria must fund their account by Thursday, 48 hours, because we will debit them for CRR. We will take their CRR to a minimum of 32.5%, which means we are going to take liquidity out of their vaults by Thursday. If any bank fails to meet up with this expectation, the decision of the MPC is that we may need to, let me use may, we may need to preclude those banks from foreign exchange market on Friday and onwards until they meet this 32.5. This message is meant to underscore the fact that MPC says this decision, this very aggressive decision to rein in inflation must yield result. We do not want to face Nigerians in the next few months and we begin to take the blame for not being able to rein in inflation in spite of all the rates that we have raised. So we have decided to adopt a two-pronged approach. Increase NPR, so policy rates, so we want to see interest rate go up, and 2, CRR going up because we must mop liquidity effectively out of the vaults of the banks. The second question from Chejina It says, how much longer before we begin to see a deceleration in inflation figures in Nigeria? Well, this will range from one economy to another economy. But our view is that the lag period should be between 2 to 3 months. What are we saying? This is September. As we begin to get into November, into December and Christmas, we should begin to see it begin to decelerate. And we are going to do everything possible to achieve this. Because we believe that with the liquidity out, what will it do? It will constrain, yes, we know, it will constrain using money for speculative purposes, because we are not going to sit down and allow people to go into their bank accounts and take naira to speculate against the currency. We will not allow it, and that is the reason we will take the money out of the vaults of the banks so that speculative use of naira can completely be tamed in the economy. About the hunger, he talked about the fact that non-oil export, that I said that third quarter non-oil export was as high as $950 million. And I think I need to thank the banks who have been our partners in this process of trying to see to how we can depend less on foreign currency coming from revenues from crude. We've always said that in Nigeria, before we found oil, that that we were surviving and paying our import bills from revenue from non-oil sectors. And we started this around mid-February. Between that mid-February and end of March, we had seen non-oil export repatriation at $62 million. And during the second quarter, it moved up to $622 million. In the third quarter, the number that we see is $950 million. Let's not forget, these are repatriations that benefited or that will benefit from our 65 naira to the dollar rebate. By the time we take into consideration others, maybe crude cocoa, raw cocoa export or raw cashew exports, or products that do not have the kind of value addition that we think it should have, we would see that there's been considerable level of people embracing the non-oil exports as a way of doing transactions. And we are very hopeful that as this continues, we'll be running most likely in billions of dollars quarterly. And our expectation is that over time, we want to see people not coming to central bank to ask for dollars, but rather they will rely on dollars that are being sold by companies to other companies through their banks, through the INA window. That is our ultimate goal, and we pray and remain hopeful that this is achievable. The fourth question talked about the airlines. Yes, but it's important for me to say this upfront on the airlines. The sector is a sector that had always enjoyed what we call priority allocation, whereas other, I use the word unimportant sectors, maybe you're importing finished goods, you're importing some items that we don't consider to be an item that contributes positively and in priority sector to the economy. Of course, you will observe that they will get 10% or 15% at best. But for other sectors where they are priority, like the airlines, we've always granted them the kind of priority that they desire, because we know people want to travel and they don't want to be constrained by the need for them to travel. Yeah, in spite of this, we've seen that the number of travels or naira value of travels for tickets issued by the airlines has increased. And when the pressure was building aggressively, we decided to release the amount that you talked about $265 million. Now, Will we? Yes, we will do everything possible, and we are determined to clear the backlog, and we will consistently at all the retail interventions, as long as the accounts of the banks are funded, we will continue to make the releases to ensure that the cumulative backlog is cleared. But I think it's important for me to say this, that the airlines or the foreign airlines are saying this because they said that we should respect the bilateral air services agreement that says that proceeds of all their ticket sales must be repatriated out of the country. It did not say that you must repatriate all your dollars through the central bank. There is no law that makes it compulsory that you must buy your dollars from the central bank. When you put your money in your account, what it means is that you tell your bank to buy you dollar. Your bank will go to the legitimate or approved sources, which in this case is the IRNI, to buy dollars and pay for your ticket sales proceeds. If they don't find, yes, they may resort to the CBN, but it does not mean that the CBN is under compulsion to provide your dollars. Because it's good for me to say this so that people don't just rest on the conclusion, not assumption, conclusion, that the CBN is under compulsion to provide the dollars. Another aspect of the bilateral services agreement I want to talk about is that we would like to appeal to the countries where the foreign airlines are domiciled or where their flights originate, that they should please, and we please beg them to give Nigerian airlines also a chance to land their aircrafts in their countries. Also, in line with the bilateral air services agreement. You cannot be having 21 landing slots in a week from your country into Nigeria, and yet you have not given a Nigerian airline that wants to land its aircraft in your country even up to 7 landings. To us, as Nigerians, this is unacceptable. And Nigerians must stand and criticize this, that it is not acceptable. What is the interest of the central bank here? When you give Nigerian airlines opportunity to land in your country, they pay people who are traveling using these airlines. I have to be selfish to defend my country, ladies and gentlemen. The only thing they will go to their banks, or by extension go to the CBN to see the need, will be dollars to import planes, or dollars to import spares, or pay for their insurance, which is significantly lower than if they were to remit the entire ticket sales. So Nigerian airlines must be given also a chance to land equal number of planes in your country per week in line with the bilateral air services agreement. That is what we are begging for. Because we've heard about some of an airline go to a country, they say they want to land. You have 21 landings here. Some of them have complained. We've read newspaper stories of where some of the Nigerian people are saying that they were told by those foreign countries that don't even call us to remind us that we are not giving approval to land. We will tell you when we are ready. That is unacceptable because it is not in line with BAFTA. And I think that Nigerians must rise to demand the rights for Nigerian airlines. The fifth issue is on e-Naira. I'm asking for what is the feedback that we have received considering the fact that it will be 1 year. Well, some of the feedback I have here, yes, as we approach 1 year, is that we have almost hit 1 million mark on downloads. And so far, 905,588 have downloaded their app. Out of it, 282,600 are currently active. So far, counts of transactions have exceeded 1.49 million, worth over 3.484 billion naira. And the breakdown is that 78,115 consumer to bank, worth about 1 billion naira. Bank to customer of 90,760 transactions, worth 945 million naira. consumer to consumer transactions of what about value of number of about 35,800, what about 480 million naira, and consumer to merchants, we've seen about 171,000 transactions worth over 387 million naira. We have seen downloads, 13,136 wallets have so far been created via the USSD channel. That was the channel we recently introduced about 3-4 weeks ago, and we are happy that progress is being made. So on the whole, I would say that for e-commerce, we have seen 99.946% increase between July and September, and this remains very encouraging. We believe the e-naira is an alternative to you holding analog naira, and it is very convenient, and we can almost say almost entirely costless. The e-naira hackathon that is CBN considering tapping into the technological knowledge piece of this youth. Certainly, yes, we are, and we take the reason why we organize the hackathon project is for us to really discover our youths that are very advanced in technology to support our e-naira project or our digital currency. And it is expected that we would work with them to ensure that we tap their ideas so as to improve our payment system in Nigeria. Another question, the second question says, what are the outcomes of the Leading Summit? And like I said, the outcomes have been very good for the RT 200. We promise that there will be two summits in a year. We held one a few months ago, and I'm sure before the end of the year, the organizers will hold another one so that we can take stock and begin to also seek people's views about how we can deepen non-oil export repatriation into the country. Lastly, on somebody asked a question that we recently reverted interest rates on intervention from 5 to 9%. Observers are keen to know what the impact of these interventions are. Like I said, we've so far disbursed about 9 trillion naira in interventions. And I needed to say that because I think that skipped me. The fact that we are saying that inflation is core and most important for us at this time does not mean that we would not continue to support very, very important and priority projects through development finance. But the pace at which we do so will certainly reduce, because we truly do want to see ourselves exiting quasi-fiscal responsibilities. So now, talking on the COVID-19%, we can say the outcome has been very good. We are happy about the outcome so far, that it has been extremely impactful in improving output growth in Nigeria. And we believe that with 10 years loan, with 2 years moratorium at 9%, that it will be difficult to see that again. And I congratulate those who have tapped into it in the last 2.5 years, to the extent that today we can beat our chest and say that we disbursed 9 trillion naira, 10-year loans with 2 years moratorium, no more than 9%. We have not started to see the impacts yet. And I can tell you, even notwithstanding the inflationary pressures we're going through, that is really optimistic. And we're saying that, yes, growth is expected to be retarded by an aggressive rate hike, but we do not think that it will really affect Nigeria that much. And that is the reason we have all read that Nigeria remains one country amongst very many in the world where the IMF has decided to retain our growth rate at 3.4%. So I thank you very much for your attention.
Thank you, Governor. Let me just quickly apologize to some of you who had wanted to ask questions and then we couldn't accommodate it, especially those who send in questions online. But like I said, tomorrow morning by 9 a.m., the Monetary Policy Technical Committee will be meeting with the press. And so we expect you to be there by 9 a.m. on the dot. And on that note, say thank you so very much for your attention. Thank you and God bless.
7 days a week. You can watch NTA International live on your TV, computer, iPad, tablet, and phone.